Hey guys, today's November the 10th of 2022, and I wanted to do a quick update and look at gold. Gold has been doing some interesting price action as of late, so I just want to kind of revisit the analysis and see where we're at. So without any further delay, let's get into the chart. As you can see, I'm going to be using data from 2001 all the way to current prices. And what we see here in gold, uh, a weekly cycle that is 245, and that one hits a trough somewhere around May of 2023, and then the cycle goes up. So looking at the weekly, gold may be ahead of itself, but price action is king, and it's going to do what it's going to do. But just know that on the weekly cycles, they're down all the way going into next year. Okay, so this is the daily chart. I'm using data from 2016 all the way to current prices. And there are three important cycles here. One is the 379 cycle. Has some good strength in regards to Bartels. Correlation's not bad, 0.56. And we just hit a trough, a cycle low around November, pretty much this week. We're going to be hitting a low, and the cycles are going to be going up. The next one is the 223 cycle here. And that one hit a trough somewhere around September 14. And you can see that it kind of went down a little bit and just kind of going sideways. And this cycle hits a peak around January. And then the last one is like 192, very similar to the 223 cycle. And that one pretty much hit a trough the last week of August, and it's going up into December. So we take these last two, 192 and 223, do a composite, and somewhere around January it peaks. Add the bigger cycle, the 379, all three, somewhere around January. You could even say January, February, it hits a peak doing the composite of all three. It'll be interesting to see this is what is moving gold in regards to the daily chart and the price action, knowing that the weeklies are still down. So we know that not everything goes in a straight line. So the daily now is going to start pushing the gold up, probably using probability, and then it'll stall out somewhere using the daily cycle, and then continue to finish wrapping up maybe like an A, B, C correction into 2023. And once that weekly cycle hits a trough, a swing low, then it may resume the trend going up. So it'll be interesting to see how that plays out. Let's go to the next chart. So here, this is one of my seasonality charts that I use. Percent of months in which gold closed higher than it opened from 2018 to 2022. And I like to use a 5-year. You can see that November was pretty low, below the 50%, and then December is very strong, also with January. So let's go to the 10-year and see what 10-year does. You can see that November is pretty weak also, which shows that it could be a possible swing low and then get a spike up to December and January. So that looks pretty, possible. Daily cycles are backing up these seasonality cycles, or seasons. So that's interesting. I could do 15. I like to go straight to 20 and see what's there. And you can see that 20, it's a little stronger. December's a little stronger, but January is probably the strongest. So between December and January, it'll be interesting to see how it's going to play out with gold. If it's going to be in line. This is what I call kind of like a cluster, where the daily cycle is looking positive also with the seasonality, if that's going to play out. Okay, here is another seasonality chart that I like to look at. And we see here what's interesting, using the 5, the 10, and the 15, somewhere around November 8, it kind of hits a peak, and we're kind of somewhere around there. And then the 5 and the 10 go down all the way to like the first week of December, and then kind of goes sideways. Like the 5-year looks like it rallies, And the 15-year looks like it goes sideways to lower. But what catches my eye here is that after November 8th, the 5 and the 10-year average go down, while the 15 just kind of goes sideways. And then somewhere around December 1st, it either finds like a low and goes sideways. The 5-year shows that it goes up, and then the 15-year kind of goes sideways and lower. So interesting to see mixed signals here. It's not all lining up, and that's typical when you do analysis. Things just don't line up, but interesting to see what is going to play out here. You got the daily cycles going up. You got seasonalities here pointing lower to sideways, and the other seasonality chart showing that in December is going to be pretty strong into January. So interesting to see how it's going to play out. I think this would be the last chart. I don't want to make this video too long, but I feel like this is like the battleground between this 2015 low. This is a monthly chart, but mind you, 1038 all the way to that high of 2089. I think this is the battleground. You can see using the Fibonacci, we're holding the 38.2 right now as support. We still have a buy signal, although the MACD is negative. This month looks like it has nice little strength to it. And you can see in this big candle right here, we fell off the demand zone and now we're back in it. So that looks very strong to me. Looking at the weekly, you can see that now we're having a MACD crossover. This is a trend line you were seeing, on the monthly. We're kind of fighting around there, maybe trying to hold on to it and stay above it. But we are in the demand zone, so could be a lot of buying pressure here, or it could go sideways. No weekly buy signal yet once we cross 1824, but if you're risky, you could probably play a little scalp or a swing trade here, as long as we don't close below 1619 or get out of the demand zone, which is 1673. And we look at the daily chart, we just got a buy signal, and we're holding that trend line that I showed you that goes all the way back to 2015. Kind of chopped around it, kind of holding it. So if it was me, it'll probably be maybe buying some stocks here, some gold miners, or maybe the futures, and maybe put a stop, or maybe wait for it to pull back and maybe buy. Kind of stagnated here. The only risk you get here is that if the seasonality of the November 8th highs goes into play, it could go against you. So I wouldn't buy it here. Just kind of maybe wait and see. But if you think there's gonna, continue pushing higher, then maybe put a buy, around 1726. Where you got some resistance up here, some levels you want to keep an eye on. But I'll be cautious, even though we got this nice momentum, because even though the dailies are up, and some of the seasonalities indicate that it could probably push, it could go sideways to lower, and maybe the 5-year average seasonality could play out and be in sync with the daily, and maybe get some nice little momentum to the upside. But you got to play how you want to play it, with your risk factor and everything, and what you're willing to tolerate. I'm just going to keep watching it, but it's just interesting price action that now we're back in the demand zone. So I want to keep an eye on that. If you like this video, hopefully you hit the like button. I'll keep you posted on my thoughts on gold using cycle analysis.